Ashok Reddy, who's MD and CEO and co-founder Teamlease Services, joins in to talk more about their business. Thanks very much, Mr. Reddy, to take out the time to speak with us. Good morning. According to reports, cross-sector hiring, which was earlier restricted to sunrise sectors, is now becoming more mainstream and could accelerate at CXO as well as other levels. What trends are you observing?
I think we're seeing demand growth coming in from across sectors, and I think this is not just at the entry-level hiring, but we're also seeing the element of mid-level and senior-level hirings coming into place. So I think if we factor it back as an indicator from our own interactions with corporates across sectors, at the entry level, lower level of hiring, the staffing requirements are going up substantially, and on the permanent recruitment front at the mid and senior level, we are seeing a lot more open positions and demand requirements that the team is now working on. So I think overall across sectors there is a hiring sentiment. And I think, at least as indications right now, it looks like it will continue for some time to come.
Mr. Reddy, you're doing well in general staffing. That has returned to historical growth trajectory in Q2 after several quarters. While specialized staffing has been a little bit mixed. So how do you see IT staffing and HR services and Evolve contributing in the coming quarters?
So I think if you look at the play between general staffing and specialized staffing, general staffing is a volume play, and I think we had a relatively soft year in the associate growth last year, and we are kind of back on track with that growth. Whereas the specialized staffing of IT and telecom have a value play in terms of pricing, are not volume driven. Having said that, the IT staffing side, we are growing consistently in numbers, and I think again the open position situation is good, and we do intend to continue that trajectory of growth on that front. The telecom business, like we had earlier mentioned, has an element of seasonality and also some element of project-based experimentation that we are doing, which, you know, if it does well, we will scale it up. If it doesn't, we will pull it back in. So it's an element of an investment phase at this juncture. But we believe that in both these verticals, the demand is quite positive, and we will be looking to sustain an element of growth in associate numbers, obviously not as large as in general staffing, but largely contributing on margins.
Is this reflecting though in the Flexi staffing in the same manner?
Come again?
Is this reflecting in Flexi staffing in the same manner?
Yes. So if you look at it, in the last 2 quarters, we've had good additions in headcount in the general staffing, in IT. Also, IT staffing, we have added headcount on a continuous basis. We had taken a large project towards the end of last year in the telecom staffing front. That project has come to an end, and hence there's an element of a reduction in the telecom staffing side. But on a consistent basis, the aspect of demand and growth is playing out. And also, if you look at our overall margin improvement, while part of it has come from the aspect of productivity in the general staffing business and economies of scale, the specialized staffing and other P&Ls have also started contributing to the margins, and that's really where we believe the margin improvement story will continue to play out from.
Right. With tailwinds like increasing formalization and compliance, need to access wider talent pool, reports project you could grow at 20-25% compounded annual growth rate over the next couple of years. Is that fair?
So I think we've done that for the last 7 to 8 years. Our belief is that the market opportunity continues to be very large. Formalization, new industries, transition from informal to formal. So our opportunity is clearly very large, and our real hope and work is towards ensuring that our past trend of growth is sustained into the future. So I think the market opportunity exists. It is for us to ensure that we are able to drive the performance to those kinds of growth, and our belief is that we should be able to do it.
Okay, so give us a sense as to how you're looking at your overall margins going forward. What is it that you're expecting? Because analysts are penciling in a gradual improvement of 50 basis points over the next couple of years. What are you aiming for?
So I think globally, the margin play at Pvt for the staffing companies works out to about 3.5% as a combination of scale, productivity, higher margin businesses complementing the specialized staffing coming into play, and all of that. And our belief is that's the trajectory that we at Teamlease could go down on. And I think the last 3 years we've shown a consistent improvement on the margins. Has come in threefold. One has been the general staffing business growing, productivity improvements in the business, economies of scale coming into play. We got into the specialized staffing, which are higher margin businesses, and they continuously scaling up has contributed to the margin improvement. And we have the other HR services P&Ls, largely around payroll, compliance, digital workforce solutions, which have been scaling up and have started contributing to the margin. So I think the trajectory of all three working in a consistent basis is really where our margin improvement story will come in from. And I think we will stay on track for that on a continuous basis, and I think our margins will improve, and that's really how it's been playing out, and we hope it will play out.
Okay, you know what, just from a pure market perspective, I know you won't be able to shed too much light on this, but some of the companies within your space, including yours, the challenge seems to be the high valuations that they're commanding. How are you looking to sort of justify that, or what is the growth plan over the next few years for the company or the sector as a whole?
So I think as a company, it's important for us to ensure that we deliver to what we promise, and I think where we came in at was that we are a growth company. The opportunity is tremendously large, and with growth, the margin improvement and the scale play can become a reality. And I think the past 3 years have continuously, and many years before that, have continuously kind of showcased that element of trajectory on growth, margin improvement, profitability, and I think the opportunity still continues to be very large. And I think these are really what the investors are looking at and kind of providing the value for. At a company level, I think it's for us to stick to the element of earnings and driving that. The PE and the valuation we leave to the market. That's outside of our control. But I think the earnings and the growth trajectory with the opportunity is what our focus would be on, and I think that's clearly playing out, and people are valuing that.
Doubt about that. We wish you all the very best. Thanks so much for taking time out and joining in, giving us a sense of what really are the levers for business growth, your plans, and look forward to chatting.